Good afternoon, everyone. This is Chris Brecher using the chart patterns. This isn't about going over Home Depot or anything. This is about going over Buyback. So a lot of people have different ways to make money. I try to make money in whatever it shows me I should make money in. So as you see, there were months where you could make the money on the downside. There's a lot of times to make money on the upside too. In fact, in a bear market, a lot of times rallies are more sharp than in a bull market. But I'm telling you right now, this is all about buybacks, and it seems like this is like a forgotten art. And I'll show you what we're talking about in here. And thanks for the happy birthday things. Yeah, we had a good time this weekend. So what are we looking at in here? Well, number one, I want to show you this with cycles, and it's not perfect. I just want you to know it's not perfect. Let me put it down here in the chat and show you. So I think I have in here. Yeah. There you go. So that's a cycle chart. Now, I'm not into cycles like Arch Crawford, into like what Pluto's doing and all that, and, or any of the other Disney characters. But the key in here is that when companies can buy back stock, usually bad news is the sell-offs are truncated. So the deal is that companies voluntarily don't buy back stock 5 weeks prior to earnings. And they usually adhere to it, most of the S&P stocks. So what you're going to see in here is this. You're going to see that. Let's go and take this and show you. And also, just so you know, on our side, we don't really do the home run stuff. We just try to grind it out, and our track record is pretty good, just so you know. Now, right here, right in here is when a lot of them start buying back stock. Usually the way I do it is by when Apple comes out. And Apple comes out the end of April, like around May 1st. So the preponderance of stocks are in a buyback blackout in this area, right in here. You can go that JP Morgan's earnings are like April 14th. So you go back about 35 days and you get in here and you get in that area. And the key is that in that area, it doesn't mean markets are blindly going down. So because over here, the markets actually went up. So the last one, which was February in here, right there, and you go in here and take that buyback blackout, the markets didn't do anything. The key is bad news is more likely to torch the markets. You'll see it right here. Buyback started right here, but the whole yen carry trade thing was here. It didn't change that much. It's just that then companies could start buying back stock. So they could start buying back stock, which means that then bad news is more like I sort of shrugged off. Now, before you say, well, how do you know companies are buying back stock? Well, I was on Yahoo TV Live on Friday, and I said, well, just go and Google buybacks. Yeah, I forgot that Yahoo has a search engine. So that was my mistake. I'm sure I'll be invited back real soon. But when you Google buybacks, what are you going to notice? U.S. companies plot 500 billion share buyback spree. That's from 6 days ago. Corporate America plans record stock buybacks. So when buybacks started again, yeah, company, it was probably going to go up. Or let's put it this way, all the tariff news would be more discounted. So, I mean, that's the way I look at it. In fact, here, I'll just show you. Copy, paste, just so you have this in your hip pocket. Now, the reason I'm showing you that is there's a rule called 10B 18. Let's see if it comes up. Let's put this in here. Just so you get an idea what we're talking about. There. Right there. Yep. When did the huge secular bull market start? It started in 1982. When did they let company's buyback stock, 1982. It's not a coincidence. But it's Rule 10b-18 right here. Skadden Arps is a famous ARB firm, so I like their Rule 10b-18. It's right in there. And basically it says this: you can't buy the last 10 minutes. That's an SEC rule. And you can't buy the opening. So you're going to notice there are a ton of stocks in the morning that open on their low. We've seen it many days in Netflix. But it also means there's some funky stuff that go on the last 10 minutes. If a lot of you are in the chart patterns mastery, you've seen it. Like I didn't think it would happen Friday because of all the China stuff coming out. And it didn't happen Friday. But the other days, it sure as heck did. This is on Thursday. Lack of buybacks. Look what happened. Wow. Right in there. Lack of buybacks. All right. How about the day before? Yeah, guess what? It's not a one-off. Lack of buybacks. And what happens is a lot of people jump the gun and they start shorting a little early. How about the day before? I mean, you might say, well, that's just a coincidence until you look. Holy crap, look at that one. That's right at 1550. Every one of these last week except Friday, the market sold off on that last 10 minutes. Look at this. That's the day before. So now you're at 4 for 4. Every single day last week, the market sold off the last 10 minutes. Every single day, except Friday, which is when I warned everybody we wouldn't really go down. It went down a little, but not a lot. So 4 for 4 isn't bad. So the key in there is to try to play things. Now, usually we'll play 0 DTE. So the reason we play 0 DTE on a Monday, Tuesday, Wednesday, and Thursday, because you get a lot of bang for your buck. So on a Friday, you'd like to play the Visas of the world and the stocks that have big buybacks. So, but the problem is you do it on a Monday, you're just not going to get a lot of bang for your buck. So that's the problem. Maybe on a Thursday. But usually the way to play it is with the SPX, the XSP, the QQQ, or the SPY. Now, the advantage with the XSP, which is a tenth of the SPX, and the SPX, is they're cash settled. So right at 4 o'clock, what's been happening is that they've closed on their absolute low. So you didn't have to do a thing. So if you initiate it by buying a cheap put, either it goes out worthless or they've been closing on their high, the puts, or the stocks on the low. And you don't give up a day trade if you let it cash settle. SPY is a little funkier because it trades till 4:15 and it's not cash settled. But if you go and look at SPX and you go to, let's say, Monday, and you go into Monday in here, I'll go on demand and just show you. We'll go into Monday. This is the rewind function of Thinkorswim. And we're going to go into here and we're going to go to a 1-minute chart. And it's pre-buffering. See the upper left? Pre-buffering. But we'll show you. So it's pre-buffering. But I mean, I know where it was. So it was pretty cool. But let it just finish pre-buffering. When I'm dual broadcasting, sometimes it takes a minute. But the point was that in this zone, you could buy cheap put spreads. There you go. So right here, we were going in. Number one, you'd like to have already a bearish pattern. So you'd like to have that, like a defined rectangle. And then you can short on the break. Or you could just go in here and blindly buy something under the market and just see what happens. They're cheap. They're really cheap. So what I mean by cheap is right here, right in this area, probably the 60-55 put debit spread was like nothing, like 50 cents. And it went out of $5. So, and it's not a one-off. Go to the next day. Yeah, look at that. That was the close. Whoa. Yeah, I sound like from what was that? Fast Times at Ridgemont High. Yeah, look at that. That is 1550. Right there is 1550. Problem is, you probably have to anticipate a little. The problem is, heck, maybe it could break up on you. But the point was that you could buy a cheap put spread any day last week in the last 20 minutes and you probably make money. It's not perfect. Don't get me wrong, it's not perfect, but it's still the trend was down, which is really exciting. So usually what we do is this. I'll just show you. We'll go to Tuesday. We had a good day Tuesday. And you go into here and you go right here. Now, I'm not saying it's going to work every day, but what happens is these companies, a preponderance of them, after Apple's earnings, just sort of the zone, can't buy back stock. So you take that right there and go and take Visa. What did Visa do at the close? Yeah, that's what it did. Because so many S&P companies it fell out of bed. Even Netflix has a big buyback. Look what Netflix did. How about Meta? Meta went down. Yeah, they all went down. But like I said, this isn't that much on a Monday or Tuesday. So, I mean, but on a Friday, if it wasn't with all this China news was coming out, yeah, you get a lot of bang for your buck, a ton of bang for the buck. But getting back to it in here, if you go back to, let's say, SPX, and you go to SPX, and you go right here. So let's say you got in early. You go here at 3:30, as you're like, I'm sure going down later. I'm just not sure when. Sort of like a slasher movie. You know, the bad person's coming out. You just don't know when. So, or from where. But let's just say right here at 3:30. So we're going to go and look at what the options were doing. So we're going to go back to 3:30 and I'll show you 15:30 right here. And I'll just show you about you could go and buy something out of the money. It's not a guarantee. Usually the way we do it is we'll take a fifth of what we made for the day. You know, because there's still a shot because you don't really have three reasons. But this has been working lately. Now, there is a caveat. It works a lot better on a day when the ES, let's say, is down 20 and some stocks refuse to go lower. When the ES is up 170, heck, if I'm a CFO, I'm not buying back my stock. Why should I? The ES is doing it for me, the programs. So it's not as cut and dry on a straight up day. But still, I'll show you. So we're going to go to the SPX and you see what it's doing. Believe it or not, that day, you know, it was choppy. That's what I'm telling you. That day was choppy. It was down 22. It was down 22. So like I said, on a down day, it works better on a down day, but I'll show you anyway. So, and that on a down day, it has a habit of going back down. So number one, you had that. Look at that defined rectangle. Defined rectangle. So you're seeing that. It looks like it's breaking up, but remember, it's down for the day, and they're probably propping it up to the last minute. So now we're going to go into here, and we're going to look at the 5220. The 5620, 5615 put debit spread right here. And it's nothing. It's 50 cents. That's what I was telling you. 50 cent right here. There, it's 53 cents. So it's probably 50 cents. I mean, be reasonable. Usually what we do is you buy twosies. So if it starts going down, you get out of half because you saw that on Wednesday it did that. First went down, then it went up. You can always sell half. Oh, and look at that. It's 50 cents. This is at 332. It's in the rewind function of Thinkorswim. You see it's 50 cents. Now go and look where it was at 1558. Remember, you're looking at the 1510. 1510. Oh, you know what I'm going to tell you. You'll see it. We can even do it with the chart. So you were buying it at the arrow. Remember that. That's why I'm showing the arrow. You're buying it at the arrow. So, and next thing you know, if it's 56.18, it's going to be $2. But it's still pre-buffering on the upper left. There you go. So right now, it's there. You're like, it's still out of the money. But where? Well, you'll see. Now it's $1. That's exactly my point. You buy two. You take profit on one and you have the other one for free. So now you've bought two of them at 50 cents. So you're outlaying $100. And now one of them is worth 120. You take your profit. Now, what happened on the close? Now, like I said, this looks easy. It's never easy. And that's why I'd rather do it when you're already up for the day. We're already having a good day. So, and I'll show you a different way to play it if you don't want to risk $100. So look at 15.59. Remember, this thing was $1.20. 15.59, yeah, guess what? And that's not even, it's $5. This isn't updating, obviously. Look at that. They're not 70 cents. They're 6 points in the money. It's just not updating. I don't know why. But yeah, it's 8 points in the money. It went to 5. It went to the maximum. There they go. There they go. 5. So yeah, I mean, if they're 4, you probably get out. But the point is, it went there. Yeah, it was really cool. Now, if you don't want to risk $100, another way to play it is the XSP, which is a 10th of the SPX. Now, it's thinner, but they'll honor the SPX markets if you just divide by 10. So if the one was 50 cents, like you saw, and you don't want to buy them because you don't want to buy two and risk $100, then you can go and do this. A lot of people love this idea. So you go into the XSP and you go to on demand, you go to the same day, and I'll show you. So we're going to go to here, but we're going to go to 1530. We know where the SPX is. The XSP was the same. So if you could buy the SPX for 50 cents, you can buy this spread for 5 cents. Now, what's the disadvantage? The disadvantage is if it goes to 10 cents, you're probably not going to sell it, even though it's a double because of the commission. But still, if you want to have something to say, I'm just staying into the close. So I'll show you. It's going to pre-buffer. We know where it is, 562. Go in and do this. This is what we did. We bought the 61.62 right here. Instead of the 60, we bought this one. There, 20 cents. Remember, this one's only 52 cents out of the money. The other one I showed you was 10 points out of the money. So we bought this one. And we just let it go. I think I sold it at like 60 cents. I know for the maximum. But you see, it's 19 cents. So if that's 560, it's $1. So so if you don't want to go and risk like $100, you go and buy an out of the money of the XSP, the index, and you do it that way. Like I said, SPY keeps trading till 4:15. You got to put in an exit order, which means you use up a day trade. You could have done the SPY. But like I said, it could go way up after the opening for all you know. But I'm just telling you, sure, you could play the SPY in some way like that. Same thing. You could play the SPY. But for us, we like cash settled. So that's why we played what we played. So I hope that makes sense for you. So what are we going to do today? Well, like I said, on a Friday, you want to mess with this. I'll show you. Not last Friday. Like I warned everybody, not last Friday because you had all that China stuff. It wasn't going to get pounded as much. But theoretically, what you do is you do this. Let's just assume May 6th was expiration day. Let's just assume it, just for laughs. And what you're going to see in here is it's 589. So the 587.5 puts are probably going to be nothing, like 5 cents. Watch what happened in the next 30 minutes. Now, I'm not sure it was meta, but a lot of them had dramatic moves. Let's see. There. And that's still not that great. Now, what's the disadvantage? It's not cash settled. See, now it's in the money. If that was on a Friday, you better get out fast. You don't want to get assigned. I mean, where you exercise your stuff. You got to be fast. That's why I'd rather play cash settled indexes. But theoretically, you went for it being 5 cents to almost 60 cents in the money. So very, very exciting to trade this kind of stuff. So you saw it with Visa. I think Visa did it. Yeah, look at that. That's the close on Tuesday. So today, what are we going to do? Well, like I said, if the markets are way up, it's less likely to work. I mean, it's just the way it is because companies don't have to buy back stock. So it might not work today. I think the best thing to do is go back to other days when the market's been way up lately. I mean, there have been a lot, and this 1550 trade has still worked. But it's worked better when most of the SPX stocks come back stock because then they don't in the last 10 minutes. It's a vacuum. So let's take a big up day. See, the problem is that's April 30th, and the problem is a lot of stocks still weren't buying back stock. But let's just take April 30th. When the market's way up, it's less likely to work because companies don't have to buy back stock. They let the ELE keep it up. So, and what happened on the close? Nothing. That's what I'm telling you. It's not the same on a straight up move day. It just isn't the same. That's why today it might not work. You want a day where it's a little down or choppy. If it's straight up, like I said, then companies don't have to buy back stock. I mean, they have no incentive because the markets are taking it up for it. But let's take another day. How about, well, here was still in the, like I said, buyback blackout does not mean stocks have to go down. It means bearish news is more likely to whack it. But it can go up. It's not a guarantee on the downside whatsoever. But if you take that day, it was choppy. Yeah, it's choppy May 1st. So go and take May 1st. Did it go down at the end? Well, let's see. Yeah, it sure did. Look at that. That's May 1st. So what did it have in common? It had that defined trend line break. Look at that. So the caveat is that day the market was already down. Not much. But the point is it was already down and then it really went down because companies were trying to prop up the market. Look at this. For 2 hours, the market wouldn't go down. That is buybacks. I mean, it was still up. It wasn't up a lot, though. Up 170, it's not less likely to work. It was up 88. Don't get me wrong. It did sell off, but it just didn't have that kind of oomph like other days. So that's how we do it. So today, am I going to mess with it? If I even think of messing with it when the ES is up 175, I have to see this. I have to see a defined rectangle, which I don't see. I mean, it's early though. Obviously, it's only 145, 154. So when you go back to these other days, you're going to see the rectangle. How about the next day? Yeah, the rectangle. You have the little one here. How about on the 5th? Yeah, the rectangle. Yeah, it's not a one-off. It's amazing how that works. So now you just don't have that defined pattern to want to go and stick your neck out. There's another rectangle on the 6th. On the 7th, not much of anything. That's right. You didn't have a defined pattern and it didn't work well. It worked, but not as well. So that's how we're going to try to play. If we see a defined rectangle or flag, sure, we'll play it. Because a bear flag is more likely to work when they can't buy back stock. But like I said, when the markets are up 175, I'm not sure I'm going to do it today. So not sure I'm going to do it. If we do, and it's 58.35, let's say it's just stuck here. Well, one is if it's stuck here for 2 hours, it's going to form a bull flag, not a bear flag. But theoretically, we just go in and buy probably the 525, 520. It'll probably be like 20 cents. Something like that. So with house money, something like that. So I'm not saying we're going to do it. I'm just telling you that that's the kind of setup. Like I said, it works a lot better when the markets are only up like 30 or down 30 and stuff like that. Up 174, it's not going to be as reliable. Of what I've seen, not as reliable. So if we go back right here. So this one, this is when you had that yen carry trade panic. And sure enough, it almost corresponded when the preponderance of stocks could buy back stock. And in here, the choppy day was a lot more lucrative day. On the way down, choppy, it worked great. On the way down, it worked even better. But it really helps if the markets are already choppy to down for the day. Today, that's going to be a rough one. Choppy to down worked great. That day didn't work because it was straight up. So I'm just telling you that we are at resistance, and the CPI is coming out tomorrow. So if there's any little sell program, you're probably going to have people back away a little. So maybe it'll work. But if we play it, we'll probably play this one. Not now. It's too early. Because you don't know how high it could go. But theoretically, we'd probably play this one for 20 cents. If it's right here. So if it's 10 points out of the money, it'll probably be 20 cents. That will do. If it stays in this zone. So, and you're up a little money. So just want to show you that's how we're going to try to do it. Like I said, it's worked a lot. And now another thing you might say, well, how do I know when the buyback blackouts? It's per stock. I'm talking about the preponderance of S&P stocks report between April 14th and the end of April. One way I do it is I just take Apple's earnings. You'll find that Apple, believe it or not, seems to work. So I'll show you. We'll take Apple on the right and S&P on the left. See the arrows? That's right when Apple's earnings are. So you'll see the arrows on the left correspond to Apple's earnings. Usually that's the ticket that most companies then are buying back stock. Not that day, just the preponderance of them are. And you'll find that it's incredible, the coincidence between Apple's earnings and the bottom of the markets. So it's not a one-off. It's very often. So I use Apple because it's right at like November 1st. It's at May 1st approximately. And you'll see that that's when it seems to work. And like I said, just because they're buybacks doesn't mean markets can't go down. And just because a buyback blackout doesn't mean markets are going down. All it means is bad news is more likely to rock the markets when they can't prop up. So I hope you find that helpful. Have a great day and talk to you later.